What you're telling me is that music is about to stop, and we're going to be left holding the biggest bag of odorous excrement ever assembled in the history of capitalism. 1974, 1987, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves.
I say when we sell. Hey, I say when we sell.
And we're live. Welcome back to episode 10. Gentlemen and lady, Morgen Rochard. We're double digits.
Thanks for having me.
Well, thank you for putting up with the delay here. A little miscommunication on the scheduling side. But
no big deal.
We've got a lot to talk about. Kids in the background.
My kids are in the background. They're opening the door. They're out, don't worry.
It's great to see. You know, Bitcoiners love building big families. We're in this for the long haul. Really getting back to
Morgan, congratulations on the new child and the new addition.
Thank you. Yeah, we're a big family of 5 now. So
how's it feel? The transition from 1 to 2 was pretty big. How's 2 to 3?
Honestly, 1 to 2 is the hardest thing. 2 to 3 is like it's nothing.
Okay.
You're already outnumbered with the 1 to 2 thing, and you have to split your time. I'll never forget this. Pierre and I wanted to go out for our anniversary. It was a big anniversary, and I should know which one it was, but I can't do the math right now in my head. I still have baby brain going. But we got 2 babysitters when we went out because we couldn't figure out how to do 2 kids. And so like the 2 babysitters showed up and they were like, why are you here? You know, we're like, we can't do 2 kids. So we thought we needed 2 babysitters for our 2 kids. And now like with 3, you know, it's whatever. You just, third baby, do whatever.
Yeah.
I'm very curious about this. I want to learn more about what's the difference like from 1 to 2 and 2 to 3 as a new parent. I need to get my head right for what's
I
in
think
store.
honestly, yeah, it's just that you are so focused on one human being and making sure that one human being has everything that they need that when you add a second one into the mix, because and this happens pretty much to every firstborn child, which is I think why firstborn children in general have a lot in common, and like their temperament and so forth, is because we have a lot of anxiety with our first kid because it's our first, and then also you don't have anyone else to focus on. So it's the anxiety plus the fact that you're like honed in on that one child, that child then demands additional attention from you as a parent. And then when you throw a second child into the mix, it's actually, I think, healthy for the first child, right? Because the first child now, while their world is initially shattered, they soon learn that, hey, like the world doesn't revolve around me. There are other people on this planet. And it's good for the first child. But as a parent, you're like, I used to direct all of my attention in this one direction. And now I have to, you know, split it between 2. And your second child definitely doesn't get the same anxiety and attention that the first child got, probably for better, not for worse. So that's my take on it, at least.
Agreed. Our youngest with our oldest, he would, we had that anxiety and that coddling, if you will. The second, he's like a year old now. It's like, yeah, you can eat a blueberry off the ground. You're going to be fine.
Yeah, that makes a lot of sense. You're a parent, and there's I'm starting to have this like rule. I don't know how much my wife can hang out with Marty's wife because, you know, they hang out and then like these contraptions start to show up, and there's no shortage of new things that have been created for like babies and things that like revolve and churn and you strap them down. And so she spent all this money on stuff, and I'm like looking at it, I'm like, I guess this is like what you need, you know, you're the mother, whatever. And my mom comes over and she's asleep. It's like her first time to get to like rest. And so my mom's like carrying the baby, and she's like, yeah, I need to go use the restroom, whatever. I was like, do you want me to take the baby? She's like, no, it's okay. And she literally stuffs like my son between 2 cushions in the couch and puts a blanket over him. And I'm like, I don't know if this is like what she would approve, because I've heard of, like, you know, the SIDS and all this stuff. The baby seemed content. She seemed fine. And she's had 4 kids. I was like, I guess we can do this, but just don't let my wife see it. It was
pro move.
Yeah, it was very pro move because I just like, that's all I do now. I'm just like stuff them in the couch.
The grandmother knows. The grandmother's had 4. She's been through the ringer.
Hopefully that's your child's first memory. They come to consciousness stuffed in some couch cushions.
Very cozy.
It's fun. It's fun. Another difference from 1 to 2 is like the schedules. Like our youngest started teething last month, so he's been up in the middle of the night
Oof.
quite
Yeah.
often. And he got all of his teeth at once, so it's been like a month-long process.
Yeah, the other thing I noticed about when you have subsequent children is that when your first is born, right, your life revolves around your firstborn. And then when your second is born, your life still revolves around your firstborn. So your secondborn is just like dragged along to all these things that your firstborn is doing. And then when your third is born, you're just like, all right, well, the other one was being dragged, so I guess we'll just drag you too. But now the third's life is being revolved, is like, has to follow what the other two are doing too. So it's just, yeah, the schedule just gets more and more hectic for sure.
Yeah. It's fun though. It's worth it.
It is fun. It's totally worth it. And they're complete joy. And my kids are just, oh, I just love them. They're amazing.
Yeah. Maybe it's a good segue into introducing you, Morgan, and what you do, because I think what you do really helps people ensure that their families have security financially, specifically, and really planning not only your children's lives, their schedules, but how you're going to take care of them, feed them, pay for their education, all that jazz.
Yeah, for sure. So I'm not a full-time mom. I wish sometimes I were, but I definitely love what I do for a living as well. I have a financial planning practice called Origin Wealth Advisors. It's 9 years old now. It will be 9 next week, actually. And I mostly deal with high net worth clients. And at this point, predominantly people who have been in Bitcoin for quite a while. I would say on average, our clients have been in Bitcoin anywhere between probably 2 and 7 years. So we've got like a wide range of people of who's come in. And it's really just what I found is that Bitcoin itself is not a financial plan. It's a really great addition to a financial plan, and it can really obviously help clients save for the future and be confident that their money will be there when they need it. But it's not the only thing that matters when it comes to financial planning. There are other aspects that are important to people in their lives, and it's a hard message, I think, for Bitcoiners, because for most Bitcoiners, they just think, all right, I just buy Bitcoin and then I don't have to worry about it. But what we found is that clients come in after they've already owned Bitcoin and they're realizing that there are other aspects of their life that they want to hone and make sure that they're saving appropriately or taking advantage of different tax vehicles or planning their inheritances properly or estate planning, other aspects to it, and just taking advantage of every aspect of their financial world. And most importantly, making sure that they're living a fulfilling life. I think a lot of the time we don't focus so much on that. We focus on, okay, once we have all the money, we'll get there and we'll know what we want to do with it, rather than maybe taking some time at the beginning to plan a little bit better where we want to go. So we help clients with all of this.
Yeah, and with a large roster of Bitcoin clients, trying to figure out how to frame this delicately, but I'll just come out and say, like, is your client base somewhat of like a nouveau rich client base that has come into wealth rather suddenly and just trying to figure out how to deal with all that?
I have some of that, and I have some older money as well. My business originally was actually beneficiaries of trusts, so otherwise known as trust fund kids. And so I definitely, I deal with both crowds, both the nouveau riche and the old rich. Everyone really has something in common. And I would say the number one thing is that whether you have had money for a long time or you're newly rich, right? Either you are on the side of where you spend more money than you probably should be, or you're on the side where you compulsively save. And we generally don't have people that sort of fall in the middle, which I find sort of interesting about the behavioral aspect of it, is that like people don't necessarily, it's not necessarily correlated with how you grew up in respect to money. It's just more about how you think about money and how you're using it on a regular basis. And I think that a lot of the time people like to think that their past plays a lot into how they interact with money in the present and also in the future. And what we've seen, at least anecdotally from the handful of clients that I've dealt with over the last decade, is that that's actually not necessarily true. And I think that that's good news for people, because what that does mean is that like humans can change and that we can implement the behavior that we want to implement, assuming that we're willing to do the work to do so.
Yeah. And Jesse, you want to say something?
Well, it's interesting to hear it framed that way, because I've definitely thought of my compulsive savings side as hard and fast, But yeah, of course, that makes sense that that's not necessarily the case. It's hard to beat the opportunity cost of holding Bitcoin, though.
It sure is. You know, you would think too, because I know that one of the reasons why we have inflation, right, in our environment, our economic environment, is that they want to incentivize people to spend. And people love to spend their money over, like, time and time again. People do love to spend their money. And I think one of the interesting things about Bitcoin is that Bitcoin is a way for people to compulsively spend their money in one way or another, even though it's technically savings, right? And I would consider it savings, obviously. But the habits that I've seen Bitcoiners have around saving Bitcoin is similar to what people do when they compulsively spend. Like some of my Bitcoiner clients, they just compulsively will buy Bitcoin to the point where they realize they've overbought, right? And then we're in a situation where, hey, we have to pay taxes as a business owner, or, you know, we actually have to put food on our table, or all sorts of other things. And they're like holding on dearly to the Bitcoin that they don't want to sell. It's an interesting thing, and you can compare it to people who, you know, compulsively spend on a credit card. Obviously, that's way worse of a situation, and you can get yourself into a really complicated financial situation doing that, and it's much harder to unwind. But the anxiety and the stress around undoing that, like from a Bitcoin perspective, I actually have seen Bitcoiners have meltdowns over selling their Bitcoin more often than me when I tell a client, like, hey, you can't use your credit card. They're much more likely to admit that, like, that's an issue, you know, that they shouldn't be overspending on their credit card rather than overbuying Bitcoin.
Love it. It's the classic marshmallow problem, though. Like, Bitcoin presents this thing where I'm a 2 marshmallow kid, you know, the classic marshmallow test of I would wait happily however long was necessary to get the 2 marshmallows rather than the 1. Yeah. And Bitcoin, in my mind, is still a marshmallow test, but it's a 10 marshmallow reward at the end. It's hard to break that, but I'm sure I fit right cleanly into the psychology that you see with those compulsive Bitcoin savers.
So what you're saying is you have the check engine light on your car right now?
Oh yeah. I downgraded from a nice Jeep Wrangler to a $2,000 Toyota Camry from 2002 or whatever it is.
There you go.
I think they're like, I don't know if this is thinking too much into it, but it's like basically one's a conscious version of getting rid of a bad money, and the other one's a subconscious version of getting rid of a bad money. Right?
Yeah, like that's a fair way of looking at it.
Right? Like, they're just getting out of it because they have no concept of, like, well, why am I holding this? I know inherently, like, or instinctually that it's reducing value. I would rather have this. And then on the other side, you're consciously saying, why am I holding these dollars? I want this other asset, all the way to the point where the check engine is negative and you got to sell, but you're willing to deal with that because it's the opportunity cost. That was just what came to mind when you mentioned, like, that you basically see compulsive on both sides. It kind of makes.
Yeah, for sure. It's like I see Bitcoiners as, like, you know, what was that experiment where they have the rats, like, tapping for the pellets? Bitcoiners are kind of like that, honestly. I feel like I'm going to get a lot of flack for this on Twitter, but we really are. I mean, I include myself in that. It's like, you know, when you have savings and you're ready to go buy Bitcoin, it's like we're just sitting there tapping and, like, trying to get more and more Bitcoin, and interacting on Twitter like that too. Like, I would just. It is a good positive feedback loop, though, right? It's not something that we currently have in our economic environment where you're living in the fiat world, right? You don't have anything that's positive in that loop. Right. You can get obviously into a much more negative loop of hitting the same thing for the pellets in the fiat world, right? But it ends up in financial ruin, not in financial gain. So it's just an interesting juxtaposition of the two.
Yeah, I think that's why we're we're ill-equipped. There's never been any drug like this I want to keep hitting that lever because it's more marshmallows, and we're ill-equipped for checking ourselves and recognizing, okay, well, that has to be balanced with the reality of life.
And I mean, this brings up a good time to talk about, like, obviously, Bitcoin has been an emerging asset over the last 15 years that has obviously affected your business, Morgan. Like, what has the emergence of Bitcoin done in terms of, like, how you view financial planning for individuals that hold Bitcoin on their individual balance sheets, and what in your mind is the best strategy to strategically approach wealth management if you're going to have Bitcoin be a large percentage of your wealth?
Yeah. So I've been advising now on Bitcoin since 2016, and the landscape has significantly changed, I would say, over the last, let's call it 7 years since I've started advising on it. Um, for instance, in 2016, it was kind of hush hush. Whenever I talked to my compliance consultant about it, she was like, "Well, if somebody asks you about it, you can talk to them, but don't make a big deal about it. Don't advertise that you're doing anything in it." And so that was just sort of the written rule at the time. And then slowly, like because I started becoming more confident in just talking to clients about it, I just sort of went on a limb and asked for forgiveness later when clients would ask me about gold. I would just bring up Bitcoin instead and just say, hey, what have you thought about this instead of gold, or maybe doing a gold and Bitcoin allocation. So that would be considered more of a solicitation in our business, which there are rules around solicitation for sure. And so the soliciting part of it was where I thought maybe I would get into trouble. But the SEC then had come out about the fact that Bitcoin's a commodity. So it's like, I can talk to a client about buying bananas or orange juice, right? Like, it's a commodity like anything else. So once that happened, I felt a lot more confident about being public about my views, and also just coming out to clients and saying, hey, have you heard about this thing? And so for my original client base, it wasn't a Bitcoin client base. It was just, regular people who are looking for financial planning, who want good advice, and they would come to us and we would help them. And then it became a portion of people's portfolios as early as 2016. We started adding to more portfolios in 2017 and 2018. There was a lull in 2019 because of how far the price had sort of gone down, and I wasn't getting much traction from clients. But in 2020, we just allocated across the board to GBTC in client portfolios using discretion with clients that we couldn't get on board. I had tried my best, and I've always had somewhere between 30 and 40 clients on board. So, or just in my practice in general. And so we were able to get a bunch of people to actually own Bitcoin. And then from there, we decided, okay, we're going to do GBTC. Once we put people in GBTC, it actually, I was sort of surprised, opened up the door to conversation. For me, I thought, okay, this is just going to be what they hold, and that kind of stinks. This isn't really what I wanted them to do. And obviously, as like a hardcore Bitcoiner myself, I have always wanted my clients to hold their own keys and do it the right way. But, I felt like it was more important for them to actually hold the asset class itself than it was for them to not be involved. And so that's how GBTC did end up in client portfolios. But the most surprising reaction was that clients, once they had it in there and they started to experience the volatility, that they became more comfortable with it, and they were actually much more willing to hold their own keys. And so from there, we were able to really convert many clients actually to being Bitcoiners and to actually holding their own keys. We have very few at this point. I think off the top of my head, I maybe have 2 clients left who actually hold GBTC. And I've got 42 clients in my practice. So, I mean, we had a pretty high conversion rate of basically being able to get people to hold their own keys. And we got most of my clients set up on either a single sig or a multi-sig solution. So everyone is either holding their own keys through Unchained Capital, or they're just holding a single sig hardware wallet. And we've had them take precautions about where they hold it and what they're doing with it. We check in regularly for key checks and other things to make sure that they're holding these things properly. And so I'm giving you all this backstory because I feel like from a financial advisor perspective, a lot of the time what financial advisors think is, oh, well, I'll just get them allocated to this position and then we won't really have to do anything about it ever again. And what I've found is that there's just a lot of things that go into Bitcoin in general. I mean, maybe for like a very hardcore Bitcoiner who's been involved for a long time and feels very secure about how they store their keys and everything else, and they've gotten their wife on board, they don't really need ancillary services around their Bitcoin. But for most, that's not necessarily the case. Even if like the husband is the hardcore Bitcoiner, the wife is probably not, and she's probably not very comfortable with how the keys are being held. And so at the very least, as an advisor, there are services around what you could do for a client there. So even if you have a client come in who's 100% Bitcoin only, there's still financial advisory services that could be possible there, just because maybe the wife's not on board, or maybe they need some sort of inheritance plan, or have how they're going to pass this Bitcoin if something's going to happen to them. Maybe they need trust services, right? There's all sorts of other things that go into financial planning that aren't necessarily thought about, because in a Bitcoin world, we think that Bitcoin fixes all of these things. But there are some things in the rules that aren't necessarily broken. They just need to be applied to the Bitcoin world.
Yeah, it's a whole new.
Yeah, yeah, go ahead.
No, you got.
I mean, it's super fascinating. I think you're you're insanely fascinating because you're living in both sides of like you're at the farthest spectrums. Like we're kind of playing in the middle, and you think about like the stuff we did at Unchained or OnRamp. Like there's folks that are kind of bridging, but I feel like RIAs and FAs are on the very far edge of starting to think about the asset and feel comfortable. And then you're talking about like clicking the rat button and understanding both sides, which is cool. And it's also like a more of just like a overarching view of like the landscape of markets or anything in the traditional world. It's like if you have an expertise in the traditional world, like you have in being a financial advisor, and then understood Bitcoin, there that confluence of like two separate things. Really, there's like magic and opportunity there, and we see this time and time again. So it's just cool to see that like come together. But I guess like where I'm curious is I guess there's a bunch. Like the first one you mentioned, Unchained, and then Single Sig. One of the big things that we've seen and historically for years is that like while FAs or RIAs want to offer the ability to buy BTC outside of GBTC, the reason why they went into GBTC was it was very easy to report. They have it in a book of business. And like my understanding is for financial advisors, they really care about the reporting and being able to bill and have it tie into their whole kind of like portfolio tracking. How have you been able to manage that? And like, how do you see that market like churning? Is there anybody else doing something like that lets individuals get access, spot exposure? Maybe they don't hold their keys or they hold some subset, but also ties into making it easy for FAs, wealth managers to do this. Cause my understanding, it's been very like clunky, and that's part of, if they're even interested, it's just too hard, and then they can't bill on it. So the incentives aren't there.
Yeah, it's super clunky. I think it's completely clunky. I think the reason why I'm able to do this is because like I love Bitcoin. I want to help my clients, right? I think that my fiduciary duty obligates me to get clients into Bitcoin. And not only does it obligate me to do so, but it also obligates me to help them hold it the right way if they're ready, willing, and able. And so like I don't like to patronize my clients either. So in my mind, the people who work with me, they're smart people. They are doing their jobs very, very well. They don't have time generally to also be doing what I do for a living. It's not necessarily that they couldn't figure out what they needed to do. Most of them can. A lot of them just literally don't have the time to do it because they're very busy. They're family people. They've got lots of kids. They've got, businesses that they're running, or they are working for, large companies, and they're giving their heart and soul to those places. And they also want to make sure that they have time to be with their family and do other things that they like and mow their lawn, right? They don't want to necessarily be thinking about their finances all the time. And then plus, if you're adding Bitcoin into portfolios, right, husband and wife need to be on board. And a lot of the times it's a lot easier to get the husband on board and a lot harder to get the wife on board. Or if you've got the wife on board, they might still not feel totally technologically savvy about all of these things. And so one of the reasons why like they want to work with an advisor like me, right, is because we're able to handhold and help them through all of these aspects of their financial planning instances that they don't necessarily want to even be doing on their own. They want to offload the things that they find unpleasant or the things that they just don't have the time to do. And the problem here, right, is that in the world that we live in right now, we're not far enough ahead in the Bitcoin world where financial advisors can just, actively allocate clients to an easy, collaborative custody solution where the advisor can bill on it very easily and can maybe hold a key for a client, which is definitely something that we would be wanting to do for clients. We've had a lot of clients ask, hey, like, I don't necessarily feel that confident about holding two keys. I want to hold one. I feel good about holding one, but if you held one and Unchained held the other, like I'd feel a lot better about that. That way, if I lose mine, I haven't lost all my Bitcoin. And so for the average advisor, like this is simply not possible. It's possible in my practice because I love Bitcoin and I'm willing to do it. And two, because we charge high enough fees where we can actually spend time with clients working on these things. The average advisor is probably charging less than I am. They're probably charging an assets under management fee rather than a flat fee based on net worth, which is how we do it in our practice. And so we have the ability to charge on something like Bitcoin without it actually being included in a client's, assets that we actually manage. And so from that perspective, it's been easy because there's no conflict of interest for me, right? If I were to be an advisor who charges an assets under management fee, then what would happen is that if I were going to set a client up with a single sig or a multi-sig solution and it wasn't under my management, quote unquote, what I'd be doing is now cutting my own fee to have the client put money into Bitcoin. And while that would be a fiduciary obligation that I would have as an advisor, I would have a hard time doing it if I was also being paid significantly less after also devoting a lot of time getting a client set up to into a multi-sig solution or a single sig solution. So the incentives are just not aligned the way that advisors are currently mostly charging. That's not necessarily the case for all advisors, but I would still say in the marketplace right now, most advisors are definitely charging an assets under management fee and not a flat fee or a flat fee based on net worth. There are a lot of other ways. I mean, there are some advisors who are doing subscription plans or flat fees like I do, or hourly planning, in which case it wouldn't matter whether or not a client held it in GBTC or if a client held it in single sig from a billing perspective. And so I think that the first thing is either figuring out a way to get client, like the way that advisors get paid versus how clients can hold Bitcoin, get that aligned. So either creating a product where an advisor can actually charge on it. A solution for that would be a collaborative custody product where like the advisor actually holds one key, the client holds one key, another custodian holds a third key, and that the advisor and the custodian are able to maybe sign off on microtransactions to get the advisor paid would probably be a good way of doing it, I would think, or advisors switching to flat fee models. And so I think right now where it stands, if an advisor wants to do what I'm doing, they have to switch to a flat fee model because the collaborative custody products are just not there yet for us to be doing what we want to be doing.
Yeah. It's fat. I've never, I mean, Morgan, I've had you on TFTC once, that was years ago, but like walking through the problems that you guys have as financial advisors managing clients' Bitcoin is extremely fascinating, number one, but also encouraging when you think about the opportunities to actually innovate in this particular space. And obviously you're on the tip of the spear as an advisor, really innovating in this space and just thinking of how much needs to be built to make this viable and to onboard as many people as possible. People may look at it with the glass half empty, like, it's not there yet, but I'm looking at it like, wow, there's a lot of opportunity to build a lot of really cool tools here.
There's a ton of opportunity. I think the other thing to notice about Bitcoin, I mean, it's really hard to make money in Bitcoin. I think that this is not often talked about enough. It's extremely hard to make money in Bitcoin unless you're buying Bitcoin. And so that's all well and good. That I think is actually, it's a plus about Bitcoin. But it also makes it difficult as if you want to be a business around Bitcoin, right? Of figuring out the right way to be Bitcoin only, which is what we all are here to be doing, right? But also being able to earn a living doing it. And so like I see a lot of opportunity for that in financial planning, just because, I mean, maybe that's just the world that I come from. But I see why, you know, these other coins and other things have popped up as well, and why other advisors maybe have been lured into that, or why these scams and altcoins have come up, and it's just because people literally have trouble making money in this space. But the thing I think that a lot of people in the Bitcoin community need to recognize is that the entire system itself is not broken. There are a lot of parts of the system that currently exist that are worth mentioning and taking note of, and working from there to build products and solutions on top of that would be like ancillary services around Bitcoin, where you would actually have a viable business model and where people would actually be able to make money in Bitcoin doing the thing that they want to do, if they just thought a little bit outside of the box about what people needed.
Yeah, I think that's exactly right. Something I think about a lot. It's like we're not recreating the wheel; we're just repurposing it, and we're just switching slightly. And it's a lot of the stuff we're working on. And like I've thought for the next 10 years, the first order of any business is education, and then the second order is whatever the product is, because we're so far from like helping people understand, you know, this is different. Marty, you referenced like the collaborative custody or like innovative products. I would maybe take a step back and Morgan, like, not challenge, but think through like the majority of advisors still don't even know the difference between Bitcoin and Solana. And so that like, while there is an appetite, I think, and exists, and you've carved out a great niche on like holding the keys. And I think probably the best way, and it's very like innovative in its sense of helping the client, or TBD, like if you hold a key, the client holds a key and a third party holds a key. But I think going even backwards, it's like, one, the incentive alignment is important because that drives everything. But then two, helping them understand, you know, one, the difference between the different like cryptocurrencies, but then also what are the better forms or products that they can feel good and confident that A, like their client is not going to get rugged, and B, that they'll be able to hold long term, so the incentives are there that it appreciates. An example of this was Gemini and the Earn product, where it's my understanding a lot of advisors leverage that product, and they got the shiny object of parking the dollar, seeing the yield, and saying, oh, so you're already in Gemini's or custodian, let's park it there. And so it's just like so much even before the custody gets figured out, which is definitely important. It's like the difference between understanding Bitcoin versus the other assets, because there's also that understanding in the FA landscape, at least the way I understand it, is that they talk about rebalancing and portfolio diversification, which is a standard practice across, traditional, equities, bonds. So can you maybe like talk about that? Because I feel like we're jumping ahead to like better forms of custody, which I think makes sense. But the reality is there's, tens of trillions of dollars that RIAs manage, but they don't even necessarily know what's the right cryptocurrency to buy and where to buy it.
So I think it's unrealistic to expect that all advisors are going to become Bitcoin only, as much as I would love that to be the reality. That's just not the case in general in what's going on in the financial advisor space in general. So to put into perspective, right, it's pretty well known at this point that low cost ETF style, index style portfolios work better than these actively managed portfolios. And that's just because there's a lot of issues with just, picking stocks and making sure that you're consistently picking the right stocks over time, right? It's a very difficult task to do. And what we found over time is that managers in general underperform the market, and managers that outperform the market, right, they don't tend to persist over long periods of time. And yes, there are always going to be those outliers, right, that are great and that'll be rock stars. But by the time the retail investor is able to get into that portfolio, it's usually, it's usually the worst possible time for them. And so if you look at what the average financial advisor is doing, not all of them are allocating their clients to, let's say, these low cost index style ETF portfolios. Some of these advisors are still using a lot of these actively managed mutual funds that cost significantly less cost significantly more than a low cost ETF and are underperforming the market, and yet they still continue to use them. And so I think from your perspective, right, as like offering this product of on-ramp or just the market perspective in general of like, when will advisors accept that Bitcoin is the only one and there is no alternative and there is no second best, right? I think it's unrealistic to ever expect that the entire space will be there. That said, though, right, like if we're comparing it to, let's say, the low-cost ETF model, 20 years ago, that was not a thing. People didn't use low-cost index-style investments, even though they were available. It was a very small percentage of financial advisors that did use that. Now, it's a very significant portion of financial advisors that are using things like that. And it would be an advisor actually has to explain themselves when they're starting to pick actively managed mutual funds and so forth to put into client portfolios. They have to explain why it is that they're using those things. And clients are much more up on what they should and shouldn't be holding. And so I think if we use this as sort of a metaphor of how it's going to happen in the Bitcoin space, yeah, I mean, I think it's one of those things where Bitcoin's 80% of the market cap, right, of the whole crypto space. Some advisors are not going to want to take a position on it, and they're probably going to want to allocate to a diversified portfolio. And they're probably going to market cap weight it because that's what they always do. In which case, they'll have clients end up in these portfolios that are 80% Bitcoin. That's at least where I see this going, when advisors actually accept that this is something that they're going to put into client portfolios. I think that if an ETF does get approved, a Bitcoin ETF, then it'll be sort of a gates open for financial advisors, especially in these larger firms where they've been having compliance issues of getting things approved. I'm much more lucky in the regard that, like, I've been a single person shop for many years. I have 2 employees who work for me. I've had a compliance consultant who's worked with me for the last decade, right? But she's not the compliance department in my firm. I'm compliance. So at the end of the day, if I say we're going to do something, we do it, right? And if later on we realize that that's not the right thing that we should have been doing from a compliance perspective, then we fix it. But we basically, like, I took my firm full steam ahead with Bitcoin before we really had the A-OK from really any state regulators. And once we were examined by the state regulator, which is a thing that happens with RAs, it's not like, they singled me out or anything like that. They do it regularly for all advisors. it wasn't a thing. They didn't, they weren't asking me a lot of questions about Bitcoin. They weren't curious as to why these were in client portfolios. They didn't write any comment letters saying anything negative about what we were doing. And so I think from that perspective, right, it's that advisors, I think we often tout that advisors need to be more educated in order to be allocated. And that's true in some regards, but the education is out there. There are a lot of people doing a lot of good education. And I think if advisors just took, 1 or 2 minutes to try to find some of these things, right, they would start going down the rabbit holes themselves. And I think that is going to happen because the longer that Bitcoin is around, right, the more that this becomes something that people start recognizing. And we've seen that happen every single wave. It's no different for advisors than it is for anybody else who's getting interested in Bitcoin, right? Every time that there is a rise in the price, it's basically the market saying, oh, like, what's going on here? We want to be interested in this. And it gets advisors interested too. And even if they're not interested on the way up, if it doesn't, go to zero on the way down, which it hasn't done over the last 15 years, then advisors are like, okay, this thing is going to stay around. And I've seen that happen every single time, right? We get more and more advisors coming in after every single cycle because it's not going away. And they're realizing that this is something that they have to hold in client portfolios. So to get back to circle back to what we were talking about originally, I would say if you build it, they will come, right? Like the other problem that we have right now in the space and what advisors have is that even if they are orange pilled and they want to help clients do this, they have no real way of actually allocating clients to this. So while yes, the education piece is not totally there, the services that advisors need to actually get their clients allocated aren't there either. So even if they want to, it's simply not a good way. It's not a seamless way of getting clients invested the way that they're able to do it basically in everything else right now. So I think that there are multiple problems for sure. And that all need to be addressed.
No, and that just to piggyback off that, I appreciate you running through that. I think the two things that are interesting about this market that's different is the education. When you think about, this is more of just like having a conversation, trying to work through it in my head. And I think as we think about our approach or just in general Bitcoin approach to offering services, is that the education most of the time in the market is not a zero in the sense that, if an FA or somebody goes in crypto and they allocate versus, just because the volatility is so extreme in digital assets, as we've seen the past 12 to 18 months. But then the core about the product offering that you mentioned this, I think before we started recording and also while we were recording, about the progression from going into a GBTC, which we all understand is, not a good product, into paper BTC. And then the education going over into, spot. And the idea is that over the time or the client's journey, that a decent portion, as the education, proliferates and they understand, they want to take possession. And the products you were referencing, even the ETF, while it's passive, it won't allow for that. And so I think my understanding is the SMAs exist, but is there anything in the market right now that you reference, it needs to be built? How would somebody get exposure in the way that gives the optionality that's low cost, easy, or as low cost as possible, with also when that person gets educated, they can actually take delivery versus it's you have exposure, but now you have a 30% taxable event or whatever the taxable event bracket they're in when they want to sell.
Yeah, I mean, I think you're referencing to the product that y'all are building, right?
No.
Just a light shell. Just a light shell.
No, I'm honestly I'm enjoying your perspective of the market, because you understand both sides of what the landscape looks like from the Bitcoin side and exactly what people need, where it's very hard. It's such an ambiguous, it's been this for years for me personally, talking with FAs, wealth managers, because it's you mentioned, there's the fixed cost or there's percentage based, and then what they need in reporting, and then also how they look at assets and the brand or who they're partnering with. And it's all just this kind of picture that isn't fully there. And it's starting to come together of okay, what's important to you? What's important to people? What are the products that they need? And then ultimately you said that the answer to the end of the test is that they actually need to take possession at a certain point, or they're going to want that optionality. And so I'm just actually trying to figure out what are the things that exist today. And it sounds like there's not many, but one of them would be some form of SMA, which is effectively where the clients are segregated assets, but they hold spot. They don't hold paper exposure or security because they ultimately want.
That's not what I actually would want. So what I would want would be a collaborative custody product, which would basically be where the client holds one key, advisor holds one key, and a third-party custodian holds one key. And the reason why you want to do it this way and not in an SMA, so an SMA would require that you actually had a custodian. And even if on the back end you had 3 different custodians, right? It's still, depending on the custodians that you have, I mean, it might be an issue, right? It might be problematic, especially what we've seen happen with custodians, right? Prime Trust comes to mind most recently of having issues and misappropriating client funds. And I get that if it's in a multi-sig solution, that's a lot less likely to happen. But if 2 of the 3 were failing, they could potentially collude, right, and move assets off. And so I would say that what an advisor would want, if they knew that this existed, would be that they were one of the keys and that they were educated in how they should hold it and how to create paths on, let's say, a master key and store that properly, and have their clients actually hold the one key and then have a third-party custodian. And the reason why you would want to do this way is because it actually eliminates all the issues that third-party custodians have with when clients want to move money. So the person who's closest to the client is always going to be the advisor. The advisor knows the client's voice. They know the client's number. They know when the client is sending a weird email. They know when somebody is trying to scam their client, right? Like we've seen this happen in elderly issues where there's elder abuse, or where somebody comes in and they try to take advantage of an elderly person who has some sort of dementia, right? We're not seeing this kind of stuff yet in Bitcoin because Bitcoin's still so new, but that's not necessarily going to be the case going down the road, right? The longer this thing exists, the more that the problems that currently happen in financial advisory settings, or just in financial settings in general, are going to perforate into the Bitcoin world. And so you want to have somebody who's there, who's able to sign for transactions with the client, right? Or with the other custodian who actually knows that client and knows what's going on in that person's situation. And so there's not a product out there right now. Like if I were going to create one, this is what I would create. I would literally create it where advisors had an easy way of holding one key, and they had an easy way of like having a path be on that one key and knew how to set that up, and then had their own portal with that one key where they can, key check their one key, where they could sign for a client through their portal, and not actually have to have access to a client's login, because there's all sorts of issues around that it gets into custody issues if you have access to a client's login, that I don't want to get into a whole compliance discussion, and where the client actually practices with holding this one key, right? Is the other thing, right? The more that they get comfortable holding that one key, the more likely they'll be willing to hold the 2 keys, in which case, if they're holding 2 out of 3, they have control of their own money. And that's the whole point of this experiment, I would say, is that you want the client to actually be able to take custody of their own money, and be able to do what they're going to do with their own money. And I think that in some regards, that actually does terrify advisors, because we relinquish a lot of control, right, when we are giving up that second key to them. But in other ways, right, it'll be freeing for advisors to know that their clients are keeping good track of their own money, which is what they're supposed to be doing from the beginning.
And so when you say the advisor holds that key, so it's like, is it one master key, like an HD wallet, and then they just use that key for all their clients with different branches?
Yeah, exactly. And like obviously the the advisor would have to be well up on storing their seed phrase and their master key separately, right? And they would be doing their own key checks, and they would need to know how to do all of these things. So there's some education around that for sure. And so I think we're early in the regard of like, if I were to release this product now, I mean, I know maybe 5 or 10 advisors who would want this, right? So it's still very, very early of who's in the space and who's doing it. But I have this build it, if you build it, they will come attitude about it, because I've talked to other advisors who they are on board, and they don't have a realistic way of allocating people to Bitcoin. And so they're just going to wait for the ETF. And they know that that's not the right solution.
Yeah. I mean, I anchored to where I was going is basically like the where you're at is, I think, where we all want everybody to be at and holding the keys. And it's like, what are the products? It's all like order of operations on the comfortability. And it starts with, digital assets or, crypto, and it's part of the portfolio. And then why is it Bitcoin? And then why is it a better product than paper? And then why do you want better forms of custody? And then, hey, I want interesting to hold the key. And I personally don't think it's like realistic. You mentioned 10 people, like where people are going to want to hold the key, at least today, in the same way people don't hold their own key. It's like, it's very scary when they hear cryptographic material and all that stuff. And we're all here to dispel that. But that was like the underlying asking in the question of like, what are the other ways, or how do we like get them to understand there is like this new form of custody, there's better forms of custody, there's forms of Bitcoin exposure that aren't paper, so that they can get like at least this middle part on the way to holding the key and your vision of how FAs should work. That was mainly like the idea, because I think you're right. I just don't think, I think we're so far off from like, I've onboarded thousands of people, some personally, and then, you know, within hiring a team and billions of dollars to holding their two keys. And the majority of them, you know, or I would say a large percentage actually never deposited BTC in the vaults because they were just, you know, looking at firmware updates, integrations, sending the transaction they probably never had before because they have it sitting on an exchange. And so it was a subset of that actually like leveraged it. And so to see like that progression is partially why we're doing what we're doing, is because there was part of the questions in Jesse's thread of what are things that people, you know, either you agree with or people all agree with that you disagree with. And I personally, and I'm going to get chastised for this, but I personally don't think that it's right to say everybody should hold their keys, nor will they end up all holding their keys 10 years from now or when Bitcoin's money. And I say that specifically from going through the process and how scary it is and how unwilling, especially the larger amount of capital an individual holds, the more that they're looking at you like, F you, why are you making me do this? Why should I have to deal with cryptographic material? And then it gets even insane when somebody's allocating $1 billion via an endowment. So anyway, that's where a lot of the root of like some of the conversation comes from.
Yeah, I mean, I think that's why if you've got a multi-sig solution and the client is only holding one key, they don't really have custody. And so they could literally do whatever they want with that key, right? They could keep it in a desk drawer if they're not being very creative. They could, you know, use it in their kitchen. They could toss it around with their kids, right? It doesn't really matter, even if they've got billions of dollars on that key, what they do with it. Obviously, we hope that they take, you know, the pride and that they like, you know, they find a good place for it and that they store their seed card correctly, right? But at the end of the day, it really doesn't matter what they do with that key if the advisor holds one and the, you know, and a third party custodian holds the other, because they know that the advisor, as long as the advisor is well educated on how to hold the key and they're taking proper care of their key, right? Then everything, and also that the custodian is taking proper care of their key, that the client is going to be fine. And I think that it's unrealistic, though, also to say that clients wouldn't want to do something like that. The more we've given clients access to their keys, the happier we've found that they've become. With the exception of a very small handful of my clients, I would say most people are happier to actually have their keys, to see how they work, to sign transactions. Basically, when we get clients set up on either single or multi-sig, what we do is we have a long meeting with them about it. We help them set up their wallet. We talk about like the way that they're supposed to store both the seed card and the hardware wallet itself. We send a very small transaction to the hardware wallet, right? We have them do it. Obviously, we don't do it. We don't have access to their Bitcoin, but we handhold them. We go onto the exchange with them, and we have them send a small amount from the exchange to the hardware wallet. Then we have them send it back to the exchange because they have to know how to use the key, right? It's not just sending it to the key; it's also sending it back. And when they actually, I've seen this over and over again, when they do the second transaction where they're sending it from the key back to the exchange, it's when a light bulb goes off in their head. And they're like, oh, this is how it works. This is so cool. Like up into that moment, it was all this play, funny money that they didn't really know what was going on. The second that they're actually really signing for a transaction, not just moving money, like copy pasting an address and sending it from their computer to the hardware wallet. When they're actually using the hardware wallet, it clicks in their head about, this is really exciting. This is something that I want to take ownership of and something that I want to do. And from there, then obviously they go and they send the whole thing back. And the reason why we do it that way is we don't want the client like accidentally sending all of their money to the wrong location. That would be a really big problem. So we have them send a small amount there first just to confirm that they're using the right address. And second, we do it back to also make sure that the path back is okay. But also just to give them the experience of using Bitcoin, right? Which is the whole point of this thing to begin with, right? It's money. It's supposed to be something that people use. It's not supposed to be something that's locked up in an ETF or locked up in some sort of product that they never touch. And so it's just giving the client the hands-on experience. And the problem I see in the advisor space is that most practices aren't run like mine. Most practices don't have, up to 50 clients in them. And they can't, spend the amount of time that they need to spend educating their client on all of these steps. A lot of practices have 100, 200, 300 clients in there, right? And they're seeing them maybe twice a year for a half hour. And so it makes it really difficult, obviously, to do the Bitcoin education that you need to do if you're running a practice like that. And so I mean, I see it just as like, the space itself needs to evolve, right? Clients, advisors need to start offering the solutions that clients want to have, and clients need to start being, I guess, okay with the fact that, you know, if they just have a $6,000 IRA somewhere, that an advisor is not going to be able to provide this service for them, right? Because it's obviously a lot of time, energy, and expenditure on the advisor's part to be able to sit there and do that with a client. So if a client wants this handholding, they're going to have to pay extra for this service. And I think that comes back around to what we were talking about before of like, how can you make some money in Bitcoin? You can provide real advice to people on how to use keys, right? And you can charge for that advice. And there's nothing wrong with doing that. It's providing a real service that a lot of people need, and doing it in a hands-on way where people will actually get the education they need rather than just, you know, watching some YouTube video online or reading a little article about it. For most people, that's just not going to be enough, especially if it's a lot of money at play.
What are the reputable product? Like, I'm genuinely curious. I don't know if anybody knows outside of Morgan, like the reputable product you would feel comfortable, like, or, you know, that like actually go into the reporting. So you kind of get that incentive model to bill on it via AUM percentage that is like spot Bitcoin. Is there anything that exists outside of, like, I know we obviously know GBTC exists, but is there anything else that's easy for somebody to like buy and just like be able to report and it just sits with the custodian?
I mean, I don't know of anything really off the top of my head. The way we do it basically is we have clients either give us their balance on a single sig, or we have, we know their balances on, like when they are holding it through Unchained Capital. And again, the clients are usually giving us like what they actually hold in Bitcoin. And then we're using that for reporting purposes. But no, I mean, it's not perfect. Obviously, it's better like if they held it, you know, on their statement. And, you know, our custodian Schwab, so it would be great. We had a little line item and Bitcoin was there and we could do reporting on it, and do performance reporting on it. But basically what happens now is that we don't do any performance reporting on it. We do performance reporting on their regular stock bond portfolio that they hold with us. And their Bitcoin is still included in their net worth. And we do reporting on net worth on an annual basis so they could see how much their net worth grows year to year, which is an appropriate time period to be checking net worth anyways. But no, it's not like a, you know, it's not, I wouldn't call it like a GIPS reporting, you know, standardized annualized return that we're doing on that, right? We're just like, hey, your net worth was 2.1 million this year. Now it's 3 million. Look, you grew 900,000 over the last year. Isn't that exciting? Bitcoin went up so much. And then we move on, right? And so obviously there is something in there that needs to happen as far as like for advisors, for the actual reporting is concerned. If you're going to have clients hold their own keys, the reporting is missing for sure. That could be as much as a simple integration though, with the platform. So somebody like Unchained Capital could basically integrate with a lot of advisor softwares. Most advisors I know are using something like Orion, Advizon, Black Diamond. I mean, those come to mind of like really easy things to just integrate with. There's other financial planning softwares that advisors would probably want, which would be eMoney, which is really hard to get connections linked up with. It's one of the reasons why we dropped eMoney. We use Right Capital as financial planning software. I use that very term loosely. I mean, we pretty much do everything in spreadsheets and then have a client connect things in Right Capital so that we have updated balances. That's but that's not really the topic of the day. But anyways, so I would say just integrating would probably be enough, especially if you're integrating with a software that actually does performance reporting, which is what advisors want to do, right? They are like, hey, I got you allocated to Bitcoin and now look, you're up 352%. And the only way for a client to know that happened would be if an advisor was able to report on it.
Very cool. I appreciate you walking through that because it's a world I've been trying to understand, and there seems like to be a lot of inefficiencies and a lot of value to be captured if you have different skill sets, specifically like you mentioned on the advising around the asset and custody.
Yeah, I mean, maybe I'm biased, right? Because I'm a financial advisor and I've been doing this for a really long time. But I know my clients really, really well. And I know I'm not alone in that. I don't think that like I'm running some sort of special business where I know my clients and other advisors don't. Time and time again, when I talk to financial advisors, they all have really, really good relationships with their clients, right? And I think that that's undervalued in the Bitcoin space, and could be leveraged more, right? Because we can really help our clients with all of these aspects of Bitcoin, which are, I mean, it's endless, I think. And so when people come out and say that the financial advisor is no longer important because Bitcoin is going to replace all of it, like I kind of laugh at that because I just think of all the extra things that we're now doing for clients because of Bitcoin that didn't exist before in my practice. And so if an advisor is in a position to be able to do this for their clients, they will be able to offer all sorts of extra services for their clients, anywhere from just basic key checks, and helping a client store their Bitcoin, to true inheritance planning and passing Bitcoin down through generations, helping clients with trust planning, which a lot of Bitcoiners are going to need, right? If Bitcoiners keep saying that Bitcoin's going to the moon, right? I know a lot of Bitcoiners like to joke about losing their Bitcoin in a tragic boating accident, right? But at the end of the day, like, you still want to legally be able to pass your money to the next generation. And obviously the hope of many Bitcoiners is that there's no government that exists in the future that would be able to, take an estate planning tax or so forth, right? But like, we still have to live in the reality that we are in right now, right? Like, I would love that future reality where none of this stuff exists, but it does, right? And I'm sorry, but like, we have to live on reality's terms, and this is where reality is at the moment. So, and there are many ways that Bitcoiners can benefit from, like, trust and estate planning that currently exists. So it's not like these things aren't out there. It's just that Bitcoiners are not willing to learn about them. And I think that that's where, like, the financial advisor can play a really big role, right, in helping clients with that. Or estate attorneys can really play a big role, or even like tax accountants, right? There's all sorts of things that we can do on the standard boring side of finances, to help people in this new Bitcoin world.
No, I think you're exactly right. Like, thought a lot about that. Is like the advisors, like, how do you lend against it in a taxable, tax efficient way? We talk about a Bitcoin backed loan and all the things downstream of it. And I hesitate saying this to most advisors, but it's like, I know you're on the other side of the spectrum, where it's like, I view a world where a financial advisor, if Bitcoin becomes money, that they're doing everything you just explained, and equities and anything else is such a small percentage that you have to know all of this and be able to speak about revocable, irrevocable trust, and helping people manage their wealth long term. So I think this is like the trend of where we'll see advisors go, and they'll either have to have the skill set or they won't be able to be in business.
Yeah, absolutely. It's the same thing with, like, the retirement products, for instance. So, like, I'm not a huge fan of Bitcoin in traditional IRAs, right? But obviously, if that's the only place that a client can buy it, then we want to be able to help them own Bitcoin the right way in a traditional IRA, rather than owning an ETF product. And the reason why would be because in the future, when they have to go take required minimum distributions from that IRA, they should be able to just take the Bitcoin out, right, in kind, and then go and spend it in retirement, rather than having to transfer that back to fiat, then maybe go buy Bitcoin in this Bitcoin future world, right? And it kind of convolutes what Bitcoin is supposed to be. So, like, ideally, the advisor is in a position where they're able to set clients up right now in the right way, so that we're not trying to transfer back in the future from an ETF into Bitcoin the right way that it was supposed to be from the beginning. And so there are products out there right now. Like, I've been talking about Unchained a lot because we use Unchained, but they have a great IRA product. There are other IRA providers that are doing it. I like Unchained just because the client can actually hold their own keys. But again, it comes back to that same problem that we've been talking about from the beginning, is that the client has to take control over two keys. And if it's a significant portion of their wealth, it could be, something that's really daunting. I mean, we have clients who, they hold anywhere between 1% and 100% of their net worth in Bitcoin. So, like, especially like for, the 100%ers who are in my practice, right? The husband's usually a hardcore Bitcoiner, but the wife's not as confident about everything that's going on. So even if the husband has set up this, elaborate multi-sig setup, if something were to happen to him, and, obviously we hope that that's not the case, then, like, the advisor plays a really key role in helping the wife figure out things. And so, and that planning actually has to take place now, right? While both are in sound mind, and both can basically, like, come to terms with what their financial situation is, and involve the advisor in it, so that if the worst thing does actually happen, that there is a plan for moving forward. And so I think that, like, that's often neglected because Bitcoin is so new. The average Bitcoiner is very young, so they don't really think these kinds of things are going to happen to them, right? But we're all starting to age. We're all going to, eventually, except for Marty. Everyone is aging on this call right now. And, we're having kids, and we've got aging parents, right? And, health events unfortunately happen to people. And these are things that we need to be thinking about now while we can, and planning for them now under the financial circumstances that we're currently in, rather than hoping for this future where none of this stuff is going to matter and you're just hand your hardware wallet to your wife. on your deathbed. I think it's unrealistic to think that that's the plan for most people, and that's actually what's going to happen. And so there are so many ways that we can be helping Bitcoiners. And then also, if you provide these services for Bitcoiners, you will attract other people into the space because they'll say, hey, look at all these things that I can do with Bitcoin. Like, I didn't know I could do that before. I didn't know that there could be an inheritance plan around my Bitcoin. I wasn't necessarily sure how I was supposed to hold it. I wasn't sure how I was going to get my wife involved. I wasn't sure how I'd be able to move it to my kids or what would happen to me if I got sick, right? So there's all sorts of things around it that I don't think are necessarily being talked about, thought about, or spoken about. And where like there's a huge business need for this, and where people would actually pay for those services. So I guess that's my soapbox, I guess, of the day is, people get into financial services so that I have products to give my clients.
Yeah, you've been living this problem for a while, and the financial services are only just beginning to catch up to the direction where you've already been. So yeah, I think you're right though. That like all of these, there's a ton of financial services out there in the traditional world that work and need to be ported over to the Bitcoin world, and that infrastructure hasn't been built yet. And I think that's the entrepreneurial opportunity for the next decade, really, is to find those niche services, products, and build them in Bitcoin, because nobody's done it yet.
Yeah, and that's really exciting. We think of you as one of the best in the business on that. And you mentioned on the estate planning, next week we have Matt McClintock, I'm sure you know, from Bespoke. And I think of him as one of the best in the business and understanding trust, irrevocable trust. So we're excited to talk about that because we think it's to your point, it's underscored and looked at from a wealth planning perspective. And there's so much that he's shared that I don't even can't retain in my head about just different ways you want to protect wealth outside of your traditional personal holdings from a number of reasons that I'm excited for him to share, because it's to your point, you just don't know what you don't know, especially when you start to accumulate wealth. And there's all these different entities and things that want it or that,
for sure.
Yeah.
I think also at the very least, right, from an estate planning perspective, and I'm sure that you'll get more on this next week, but a lot of people aren't really up on what happens when a probate asset is being passed in their state. So I think often people just think, oh, well, I have a will and everything's fine, and Bitcoin will be included in that will or whatever. Or, I won't even include Bitcoin in my will. I'll just tell, whoever's supposed to collect my Bitcoin where my, tinfoil box is somewhere, and they'll go dig it up, right? The problem is that if you actually go through a probate court, every state has a different set of rules of what actually has to happen in order to pass wealth to the next generation. And so if Bitcoin is right now, if you don't hold Bitcoin in, let's say, an IRA or in a trust, right, it's considered a probate asset. And with the exception of Texas right now, I don't really know of any other. I mean, I'm not up on all 50 states, so I don't want people to think that you only can do this if you're in Texas. There might be another state where this is possible. But Texas has a very private probate process. So basically, you can pass Bitcoin through probate without your Bitcoin's location, without the number of Bitcoin being publicly announced. Basically, what happens in probate is that after you die and you go through probate, your assets all become public. Anything that's not in a trust or in an IRA type investment or in an insurance product basically comes out as something that creditors can go after. And in Texas, what it is that if you don't have any creditors, then none of that information becomes public. If you do have creditors, what they have to do is actually petition the court to overturn those documents so that they can find out what you have and then therefore go after it. And so one of the things, though, that people need to know is if there's a private probate process in their state, because if there's not, what could happen, especially if you didn't plan your inheritance properly, would be that your Bitcoin now is a probate asset. And your Bitcoin address where it's stored is now public, and the number of Bitcoin that you have at that address is now public, and it's attached to your name because it's on a probate docket. And I think that's literally a worst nightmare for a lot of Bitcoiners is that exact scenario of their name, their address, the number of Bitcoin that they have, all of that now being public, right? And now everyone knows that whoever inherited that has all of that Bitcoin. And so I think some basic planning people need to do would be you need a revocable living trust at the very least to store your Bitcoin. And if you don't want it to become a probate asset, if you're not living in a state where you have a private probate process, And then, there's a lot of other trust planning that people can do. But I mean, these are some basic things, right, that the trust and estate attorneys could really help with. And they could be working, quote unquote, in Bitcoin by, implementing these trusts for people to assign their Bitcoin to certain trust assets and so forth.
You just mentioned that's a worse nightmare. You know what's even a worse nightmare than that is imagine that happened to you if you're still alive. It was either Matt or one of his team members that explained basically everything you just referenced. But if you're sued or get hit, you hit a car, somebody else has a car, they know that you're more prone, or basically if you're a public figure in this space, but that you can come after those assets while you're alive if they're not in the right vehicle. So that's something that we'll definitely want to, but that just made me think of that. It's like dead, selfishly, it's like, they'll figure it out, whatever. But alive is another kind of just a whole can of worms of somebody coming after your money that you thought was safe.
Yeah, for sure. I'd say dead is probably a nightmare for people too, though, right? Because of who you're leaving it to. You want to make sure that they're protected and that people aren't going after them. And there's nothing you can do about it once you're beyond this life. So I don't know. I mean, there's a lot of things that Bitcoiners definitely need to be thinking about. And I often get a lot of backlash about it when I bring these things up because the number one comment I hear from Bitcoiners is that stuff's just not going to be a thing that I need to worry about in the future. And I get it. I 100%. I hope it's my best hope that we don't have to deal with that in the future. But in the meantime, while we do still need to deal with it, it's something that is worth taking a look at and planning for now.
Yeah. Changing gears a little bit and building on the conversation we had before we hit record, there was that document from BlackRock that came out that had a recommended allocation. I'm not sure what the validity is, whether or not it was just one analyst putting out some bull fuel before the ETF launches, but they had an 80% Bitcoin, 15% stock, 4% or 5% bond allocation recommendation in that one document. You mentioned that you have clients ranging anywhere from 1% exposure to 100% exposure. How do you, as a financial advisor, approach the discussion of the appropriate allocation for Bitcoin?
Yeah, Bitcoin? Absolutely. I love that question. It's really not a one size fits all question for sure. I know in traditional finance, right, there's the 60-40 or 60% in stocks, 40% in bonds. And most people can have that allocation, or that's a moderate style allocation. With Bitcoin, I don't really see it as that. For me, Bitcoin is one of these things where client really needs to understand the technology in order to have a large position in it. So in that respect, it's a little different than I would say how we allocate the average asset. There's always the risk tolerance of the client, which we start with first. So risk tolerance has two aspects to it. One of them is just literally tolerance, like, what you think of if somebody's willing to go bungee jumping or they like to take risk. And that's typically what people think of when they think of risk tolerances. But there's also the ability aspect of a risk tolerance, is whether or not this person actually can take risk. And within ability is income stable? Do they have a lot of assets to their name? Somebody with a lot of assets is going to have a lot more ability to take risk than somebody with a small amount of assets, right? Because if they have only $1 to their name and they lose their dollar, right, now they have nothing. Whereas somebody who has $1 billion, right, if they lose 100 million of it, it's not as big of a deal. And so there's that aspect to it, how regularly you're paid, whether or not your income is stable, how long you've been investing. All of that's going to play into your ability to take risk. And people usually like to only look at their willingness to take risk and not necessarily their ability to take risk. And all of that does play into Bitcoin as well. But then there's also the understanding of the technology, because it's new and it's different and it's a savings technology. And it really flips people on their head about the fact that it's a money that you're putting in portfolio. It's just a volatile money. Relative to the dollar. So, and I would call the dollar volatile, but I would say it's volatile in a way where people don't necessarily see it because everything's priced in dollars, right? You see it as an inflationary aspect on your purchasing power and so forth, but you don't necessarily see the fluctuation of your money in your bank account every single day. And so if you use Bitcoin as your unit of account, you wouldn't see that either. But because we're not using it as our unit of account yet, right, you see the fluctuation of Bitcoin in as being when you're holding it as a money. And therefore, in order to be able to persist in holding it, you need to understand the technology better. So there's those three aspects of it. And then it's allocating from there. So we used to start with how clients ended up with some of these 1% positions, because we actually used to take starting positions of 1%. I actually don't believe in a 1% starting position anymore. I do think it's too low. We try to have clients start if they're feeling really scared and nervous about it, actually at 3%, and we do it of net worth, not of investable assets. And the reason why I do it based on net worth is because I think of it as a money and not as an investment. And so advisors can bicker about whether or not that's the right way to do it. Obviously, that's how we do it in our practice. And so for most people, though, it's going to be a much bigger percentage of their investable assets portfolio, even if we're starting with a 3% position of net worth, because most clients have other assets besides their investable assets. And so from there, if we're starting at 3%, then it's really how much the client can afford to have in their portfolio, and what their situation looks like. And so I would say for most people, then starting positions are probably somewhere between 3 and 20%. And then fluctuations from there will obviously, we like to rebalance when things go down and where the percentage goes down, but we try to have clients not rebalance on the way up. And so for some clients, that's just simply not feasible. And the risk, like their ability to take risk and their willingness to take risk it's not in line with what's going on with Bitcoin, in which case we will have to trim positions as they go up. But for most people, what we do is a sort of a set it and forget it thing, especially if they have it on hardware wallets. So we're like, this is your position. We might add to it and call it a day, but don't worry about it. Just let it sit tight. And we have sort of a max dollar amount that we're willing to put into it from a percentage basis of their portfolio. And then we just let it go and see where it goes. And that's because there have been many studies done on rebalancing, and rebalancing actually doesn't really work. Advisors don't like to admit this because it's something that we like to say that we do for clients. And so they don't like to admit that rebalancing is not necessarily the right thing to do. But the thing that you need to do for clients is tax loss harvesting, not rebalancing. So rebalancing typically takes place in a tax loss harvesting manner, I would say in my practice, rather than actually rebalancing where we're sitting there trying to figure out whether or not clients need to go back to specific percentage allocations. But generally, risk assets over time are going to do better than risk off assets, right? And therefore, you would want the risk asset portion of the portfolio to grow over time. And you would want to leave the other portions of the portfolio that really aren't going to be performing for a client, which in this case, I'm really referencing cash and bonds here, as is. And so Bitcoin to me is a risk asset. And even though it's a money, it's still something that is highly volatile, right? And something that you're looking as a long-term savings product, not a short-term savings product, in which case it would be a risk asset and something that we would want to hold for a long period of time and something that we would not want to rebalance. Same thing as stocks. And so that's how we approach it for clients. We're not a cookie cutter style practice. Everyone's got their own portfolio allocations. One of the reasons why my practice is small and why our fees are high is because we like to have one-on-one attention with our clients and make sure that the portfolio actually fits what they need to do. I think what people need to focus on in their own lives is how much of their money do they need right now versus how much money are they, able to allocate for the future. Because really what you can do in portfolios from there is say, okay, if I know I only need, $100,000, let's say over the next 3 or 5 years, anything else I have in excess of that, I can put into a portfolio of Bitcoin or stocks or however I want to do it. Right. And that could be your allocation. And that's how you measure the allocation percentage. You're literally matching your assets with your liabilities. So if you've got short-term liabilities that you need to meet, you can't use a long-term asset like Bitcoin to meet them. And again, it's something that Bitcoiners don't like to hear because they want to hold everything in Bitcoin all the time. And I 100% get that. But if you also, if you need to go make a payment on something in the next, 3 to 5 months and it's a large payment and then you have to go sell your Bitcoin at a loss, that's not necessarily good for your financial situation either. So I think it's just separating into buckets what you have on a short-term basis of needs versus what's on a long-term basis that you can store away, squirrel away, and hit that tablet or hit the rat button to get more Bitcoin for your long-term savings portfolio. And that's how you should come up with your allocation.
We've thought through this pretty thoroughly.
I mean, this is all I do all day. So, yeah.
No, I completely agree. I do think there is a level of naivety that exists out there with Bitcoiners who are like, yeah, we're going to replace the state. But I think your framing of, hey, we live in a reality. There are certain rules that you should follow and probably will be advantageous for you to follow if the end state of where this is going in your mind doesn't materialize before you either need to pass along your wealth or something happens, like Michael said, while you're alive, and you have to take care of those liabilities. It's one thing, and it goes back to the comment I made earlier. I do believe, and it's something I think about A lot, because there's that thing about like old rich, old money, and new money, and I think a lot of Bitcoiners are new money. And they have this idea of like, it's going to be incredible, but the history of new money is people that don't know how to manage it properly, and that's one thing I would hate to see is Bitcoiners get a lot of wealth and then mismanage it. And so really having a plan, sticking to it, and getting that plan early, most importantly, is something that I think a lot of Bitcoiners should be thinking about.
Yeah, there are a lot of old money examples that are public that you can follow. So, I mean, for instance, the royal family in England. I know people like, not necessarily like their day-to-day activities or what they're personally doing, but if you look at what the family has done from a wealth perspective, right? They have very set rules and documents on how the wealth is to be spent, how it's to be transferred, how it's like literally, I mean, down to like what uniforms, the people who work in the castle are supposed to wear, right? I mean, they've got just documentation on all of this stuff. And so you can, as a family, right, if you're thinking about the fact that, like, all right, maybe you bought Bitcoin a while ago and you've got all the Bitcoin you could ever need, and you're looking at passing this down as a multi-generational wealth experiment with your family, right? Like, there are examples out there where you can take it to an extreme and have like serious documents drafted up about how future generations could spend. Or you can, take time to sit down with your family and have conversations about values, right? Or maybe you need a little bit of both. And these are things that, like, conversations that advisors can help clients with, right? Is like the multi-generational wealth of setting up like how you're going to pass this to your children. And it's not just like literally how they're going to take over the keys. It's like how they are going to know what to do with this in the future. How they are going to know what it is that you value and how it is that they are going to actually value things. And I think that we often like to think, we're doing that all the time with our kids and we're planting the right things in their brains. But if you look at, let's say, your parents' generation, right? Like, I know I didn't necessarily follow everything that my parents wanted for me. And I know that my kids are probably not going to follow everything that I say that they should do either. And the idea is not really that they become a replica of me, all right? Because my kids aren't placed on this earth to be a copy of me. They already have one of me on earth. They don't need another one of me. They need them, right? That's why they're here. And so the point is, if you want to create this, if you want to really be a family name and have multi-generational wealth, it's not only having all this documentation in place, but it's also constantly planting in your kids' brains, like what the right thing is to do. And not only planting it in their brains, but making sure they know it so well that they're ready to plant it in the next generation's brain, and they're ready to plant it in the next generation's brain. Like, this is not necessarily something that's so simple from a planning perspective. It's like, it's just constant cultivation, right? It's like a gardening approach rather than being a carpenter, right? You can hammer a nail a couple of times and maybe make your kids do what you want them to do. But if you're planting a garden, right, you need to water it, and you need to plant properly, and you need to get the sunlight just right, and you need to and you need to constantly be doing it, right? It's not something that you just do once and that's it. And I think that some of these things are really hard for for people to do in general, because talking about money is hard. And maybe we didn't grow up talking about money, or maybe it's something there's taboo in the household about talking about money, or maybe the husband and wife aren't necessarily on board with how money should be spent or saved and so forth. And so it makes conversations with the next generation really difficult. But the best way to protect your wealth, right, if you're going to hold a long-term asset like Bitcoin, is also to be making sure that you're doing the right thing for the future, and what they're like, how the future is going to spend that money as well. So these are things obviously that are in my brain quite a bit and that I'm always thinking about. And so it's something that it's my greatest hope that not only do Bitcoiners keep their wealth, but they're able to pass it on to family members who then value it the same way that Bitcoiners do today.
Yeah, this topic of I forget, 7-generation planning was popular a couple of years ago in Bitcoin circles.
Yeah, it was I believe the Iroquois Nation popularized it. Seven generation thinking.
Yeah, and it's so interesting that Bitcoin causes that to be relevant in a way that things, that kind of long-term financial planning hasn't really been relevant in the modern era, at least. And, it brings back all the classic tropes of like the 4 generations of wealth of, I forget how it is exactly, but the first generation makes the money, second generation preserves the money because they get enough of the signal from the people who made the money of like how to how to responsibly steward that wealth. The third generation doesn't get as much of that signal. It's sort of diluted through time, and they end up squandering the wealth. And then the fourth generation goes broke. And that's like the classic arc of the way of wealth. And there are these examples like the British royal family, which is greatly helped by not having to pay taxes on inheritance or taxes in general. But yeah, Bitcoin makes this relevant again because it's an asset that can and should continue to appreciate in value for the next 200 years. That's what 7 generations comes out to. And it's wild to have to think about that and consider how do you propagate the signal of wealth preservation and stewardship over time. And for a little bit of personal anecdote, this is something that I think about a fair bit because my great-grandfather bought a farm in Iowa, and that farm is still in the family. And so that farm has provided a middle-class safety net for 3 generations now. And, the classic wisdom has applied here of don't sell the farm. Hold on to the farm, don't touch it, just let it be. And that's a scarce asset from the past, this real estate asset that not only continues to appreciate in value, but it generates a dividend, a yield from annual harvests. And it's not a big farm, but it has provided a safety net for 3 generations of my family. And that's the only ancestor that I know much about, because that's the only ancestor that's been really relevant to my financial world and my life in general, because of the foundation that choice laid, and the signal that has managed to propagate through the generations of don't sell the farm, hold on to it, it's the safety net.
I certainly hope that that's the way future generations see Bitcoin. There are all sorts of, there are trusts and things that do exist where you could actually pretty much lock up your trust or your Bitcoin for years and years and years. I think there's called a dynasty trust. I don't know that much about it, so maybe Matt can speak a little bit more on it than I can. The problem with some of these trust products, though, I would say that Bitcoiners are going to run into, especially if you're a young Bitcoiner, would be that you put your assets into the trust. Once you do that, you're no longer associated with those assets, right? The whole way of getting out of the estate planning tax issues is that you basically put your money into a trust, and it's irrevocable, meaning that you are no longer allowed to take that money out of the trust. And so for a young person, let's say somebody in their 30s and 40s, you might not necessarily want to put all of your net worth, even though the state tax exemptions right now are very, very high and they're set to sunset. You wouldn't necessarily want to do that, because should you be in a situation where you actually need that money, you wouldn't have access to that money. But there are ways for you to essentially have that be the family farm, in your family, where people wouldn't be able to touch it. You would just have to appropriately allocate what you put an appropriate allocation into that trust. There are other trusts exist too that where you could take lifetime income from the trust, even though you wouldn't be able to actually touch the assets in the trust. But Bitcoin's not an income generating asset, so maybe a trust and estates attorney can comment on this a little bit better than I can, because I'm that's probably beyond the scope of what we're able to do in my practice. But I'm sure somebody can come up with a trust where you would actually be able to take income from it by taking out of the principal of Bitcoin in a specific percentage every single year. Usually these percentages are somewhere between 3 and 5% of withdrawal rates. And so something like that could probably be drafted up by somebody who is smarter than me. But these are just things that I'm thinking about of how we can preserve wealth over time. Because you can have these, you can have a trust go to the next generation, or you can have one that skips a generation, goes to grandchildren and so forth, and where the grantor of the trust actually takes income from the trust, and then the kids of the grantor could take income from the trust, and then the third generation would actually inherit the trust. So obviously, though, you would want to make sure that you educated properly so that by the time it got to the grandchildren, it was something that they knew they could be a steward of. And, at some point, we got to relinquish control, obviously, because there's only so much you can do in your lifetime and beyond.
Yeah. Start thinking about it. Start thinking about it.
Really
I mean,
when you go further down the rabbit hole, like Morgan just shared, it's like we all would hope, Bitcoin does its thing and we're using Bitcoin as money, but there's still so much to build and such a long process ahead of us.
well, and I'll be frank here too. It's like one thing thinking about all this, it does seem daunting and overwhelming, but it really is driving urgency, and not urgency, but maybe like really highlighting like the need for discipline, and especially with how you manage your wealth and spend and invest. Like discipline is a word that
For
comes
sure.
top of mind.
I think it's hard too, because especially if you're nouveau riche, as we've been talking about, right? Like the urge is to say, oh, well, now I'm wealthy and now I can finally do all those things that I've been dreaming about doing. And sometimes you should do some of that, right? Like there's some of those things that you absolutely should check off your list if they're experiences or things that you can't live without. But there are other parts of that where if you just are a little more thoughtful about how you use your money, and the next generation sees how thoughtful you are about it. And if you're constantly planting that thoughtfulness into their brain and doing it through example, not just by telling them that they need to be thoughtful, right? I'm not going to be thoughtful, but you be thoughtful, right? Then they're going to see it and they'll be thoughtful in turn. And then the hope, obviously, is that because they've learned how to also be thoughtful about their money, that then they could go on as the next generation with that money and be thoughtful, and their children will see it and so forth. But the urge is obviously not to be that way, because especially if you were in a situation where, maybe you're making less than $100,000 a year and you've done a really good job of scrounging away a bunch of money to save a bunch of Bitcoin, and then Bitcoin, 100x's, and now all of a sudden you've got all this money and you finally don't have to be living the way that you used to live. It doesn't necessarily mean that you should keep living that way, but it does still mean that you have to have the thoughtfulness and the practice and the discipline, like Marty was saying, around still spending your money in a way that makes sense, and that is meaningful, because you can get into situations, and I see this with clients all the time, where you don't have a meaningful life because you're just throwing money around. And I think it affects people's psyches, and it for sure affects people's souls. And that's not what Bitcoin is all about, right? If you're living in if you want to live in the Bitcoin world because you think the Bitcoin world is going to be better than the fiat world today, then there are steps that everybody needs to take to make sure that they're living that purposeful, meaningful life, with regards to their money.
Yeah. I think we talked about this last week with Dylan. The fact that money doesn't grow on trees, or the thought that it's not widely understood, has caused a lot of, you mentioned souls. Like there's a lot of industries. I think of financial advisors, one of them. Like when I think of one for my mother-in-law, like she does nothing effectively other than keep her on track, like send her stuff. And I don't think that's what it was meant to be. Like you said, there's a lot of services to be delivered or given. Recruiting is another one where most people think of recruiting. I think of recruiting in sales and similarly, like spray and pray. Everybody's been hit by the recruiter, but reality is like a recruiter or a salesperson is like a consultant. They're there to educate and help you and be a strategic like partner in what you're looking to get. But because you have like loose money, it's easy from the recruiting standpoint. You just spray and pray because people are leaving their jobs for shinier objects and the company has the money to spend. But reality, that wasn't. There was real opportunity cost, and you had to be strategic about that. So I know there's like we have the common trope of Bitcoin fixes this, but there you can like get back to the first principles of how like these different verticals or industries have been completely like messed up. And what you're doing is effectively how it gets fixed, because Bitcoin requires certain key like skill set to like help the end client, and you have to understand what their needs are and their plans. It's not just like, here's 60-40, good luck, because that's going to wreck a lot of people in short order.
Yeah, absolutely.
Yeah. On a total pivot, I know we're running out of time here, so I think we should introduce the. This week we tried something a little different for the podcast of trying to crowdsource some topics to talk about. And I have to admit that I did not do it right because I walked into a trap of my own making.
Shout out to Eric Kaysen.
I left it wide open of whichever comment gets the most likes. We'll talk about that. And Eric Kaysen, thanks very much for writing Doing Mushrooms, which got the most likes. I think it got 93 likes. So I promised that we would talk about that. So I thought about what would be interesting or relevant or appropriate to talk about there. Logan, I left a little chart in the chat if you want to pull that up. So I put together my thoughts on this. So first of all, why are mushrooms illegal? And that's where this chart is relevant. If Logan, you can pull that up. So this is a official UK drug czar department chart of drug harms, harms to society by various drugs that they put out 10 years ago. And the guy who was heading that department immediately got sacked because this was against the narrative. But mushrooms, if you can see the chart for those who aren't on YouTube, it's the bottom of this long list of all drugs. And alcohol is right at the top because it obviously results in drunk driving and the like. So that's a very interesting and relevant bit. The other part that I think is interesting, so I was a neuroscience major in undergrad, and there's a quote from Antonio Damasio's Looking for Spinoza, which I read 15 years ago, so it'll be a little mangled, but that we learn about the brain through the scalpel of brain damage and drugs. And that specifically means we learn about how the brain works because of when it's not working, when certain areas of the brain stop working because there's brain damage or because drugs tamper with them. That's how we learn about how the brain works. And, classic example would be like, how do we know what the amygdala does? The amygdala controls fear and anxiety. It's a little almond-shaped center structure at the center of the brain. And when you have a beer, you feel that euphoria come creeping in. That's actually the poison of the brain, of the alcohol, acting on the brain in general, but affecting the amygdala first. So it's tamping down the amount of anxiety that you feel, just turning down the output of that area of the brain. And that's the anxiolytic effect that you feel. So I think it's kind of remarkable that mushrooms are illegal when they have the lowest amount of harm to society, and also come with this interesting phenomenon. It's the travel effect of novelty in the brain and how that is experienced. There was an fMRI study of little kids' brains, and one of that determined that in many ways the patterns of thought in little kids' brains are similar to people on LSD, which is to say that these compounds awaken the brain and flood it with stimuli and novelty in the same way that you would if you're walking around in Rome and everything's fresh and novel. So if anyone's curious to learn more about how neuroscience and brain chemistry works, the most interesting recent book on that is probably Michael Pollan's How to Change Your Mind, which explores a few specific drugs and semi-drugs, including caffeine, and how humans have developed a symbiotic relationship with some of these chemicals and incorporated it into their lives and civilizations. And there's a really good documentary too called Fantastic Fungi, which is a little bit more extreme, but the Michael Pollan book is a great place to start. So I fulfilled my pledge. We talked about mushrooms.
Oh, we didn't all talk about it. I mean, doing mushrooms, just everything in moderation and setting is important. So just be aware, freaks.
Yeah, I mean, all I got is I've been racking my brain on. I love Eric. I consider him a good friend. And it's just like, how do we get Eric on the pod but keep it professional? And I think we need to get Eric on the pod, but we can talk about his time at Coinbase, some of the risk, edge risk. But Eric, thanks for making us talk about shrooms on the pod. We ideally will have more interactive ways that will cost and hard assets to post. Things like shrooms, and how you vote will require another hard asset, or the same hard asset but require it. So yeah, that's a little sneak peek of what we're aiming to get some more engaging. There's been a lot of feedback on really good ideas to talk about, so we were hoping to attempt that. It wasn't the greatest success from the last one, but we did get to learn about Jesse's past.
Jesse, I knew Having run many shows and done similar things in the past, as soon as I saw that tweet hit my notifications, I was like, this is not going to end the way it thinks it's going to end.
Yeah, well, always happy to talk about neuroscience. I never get to anymore. It's 15 years old information in my brain floating around. So
yeah, you actually did say something that did hit close to home, because I actually wound up taking a biology of the brain elective in college, and it was because I've had trauma. I've had many concussions, 5 pretty bad ones, and so I learned similar things taking that class, like how the synapses and neurotransmitters work and interact, and how you can get them going again if you've hit your head a bunch of times.
Marty actually did shroom last night, so that's really
No.
It all makes more sense now that you're saying you've bumped your head so many times.
Ouch, Morgan.
Yeah.
No,
All right.
Marty's a hardcore Bitcoiner because he's had 5 concussions.
Oh, well, I mean,
That's where Marty Jones comes from, huh?
No, I've always been that way, even before the concussions. But no, yeah, younger years, teach their own. Again, the mushroom advice, moderation setting, important.
I have nothing to add to this conversation. I don't even drink coffee. I once went to one of my sons had this friend, and I went to their house one time with my son for his little play date, and the wife turned to me and she goes, "What can I get you? Can I get you a beer or a wine or a coffee?" And I was like, just a water. And she's like, "Don't you drink anything fun?" Like, not really. No, I just gotta drink water and seltzer and occasional tea. But yeah, pretty straight-laced over here.
That's what I'd like to see in a financial advisor, if we're being honest.
Yeah, exactly. Just spend a lot of time thinking about other people's money. So
It's wise though, because the hidden cost is what you pay after the fun time. You know.
The
Come
hangover.
down.
as we're about to find out with the fiat system. Morgan, this has been a pleasure. I think in terms of the amount of information that was shared by a guest on this show, 10 episodes in, this was definitely the most informative. So thank you for giving us a peek into your world as a financial advisor, dealing with Bitcoin and helping clients navigate their journey as they're trying to handle their wealth and think about their Bitcoin allocation and how they can steward that.
Yeah, absolutely. Thanks for having me on.
awesome. Thanks, Morgan.
We'll see you guys next week.